Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at if Bitcoin is likely to ever decouple from traditional markets. To do this, we'll use a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, we're just on the BTC USD weekly chart on TradingView, and this gives us a good oversight of Bitcoin's price history. And what we'll do is immediately add up the Bitcoin versus S&P 500. So this orange line here just representing the S&P 500 and its returns that it's had over Bitcoin's price history. And almost immediately you can see the correlation. We can see as Bitcoin price peaks, this usually coincides with a price peak in the S&P 500, and as Bitcoin's price bottoms, the same can usually be said for the S&P too. Now this has been especially true over the past few months as Bitcoin and traditional markets have gone into a bit of a bear market. The correlation in asset prices and their movements has been pretty much one-to-one. Especially if we drop down onto the daily chart over the past few months, this has been very much a one-to-one correlation between Bitcoin price and traditional markets. Now, if we zoom out a bit here, we can see obviously the price movements in Bitcoin are far greater than those in traditional markets. This is due to Bitcoin's speculative nature and just the fact that it hasn't been around that long. The price movements in Bitcoin are very much over-exaggerated and likely will be until the asset class grows and matures just a little more. Now, we've added the S&P 500, but what if we add the gold chart? And we can see, usually Bitcoin, which is associated as a digital gold, it has a narrative as a store of value and this medium of exchange, but a hard asset. We can see that there is actually quite a negative correlation between the Bitcoin price and the gold price. We can see periods where Bitcoin's price is massively increasing. This usually is when gold is either going sideways or decreasing in price. And then as we see Bitcoin's price decreasing, this often coincides with the gold price increasing. So while Bitcoin, which is usually referred to as potentially a future hedge for traditional markets, it seems that Bitcoin is much more tied to the price of equities and large global indexes. It is much more of a speculative and volatile version of potentially the S&P 500, and what it is traditionally partnered with, assets such as gold and silver, might not be quite as correlated. So if we just zoom out once more, we can actually see the correlation coefficient here, which in this example we're looking at on a 52-week basis, so the yearly correlation. And a value of 1 indicates a perfect correlation in price movement, and a value of -1, a complete opposite correlation of price movement. And we can see for the almost vast majority of Bitcoin's price history, there has been a very high level of correlation. There are obviously periods where the assets are much less correlated, but this is just due to the cyclical nature of markets. We can see Bitcoin for most of its price history has operated on almost a 4-year cycle. And this actually coincides quite nicely with the Bitcoin halving events, which I've overlaid here with these white bars. Now, the halving event, if you weren't already aware, is when the Bitcoin's inflationary rate, which is every 10 minutes when new blocks are mined, new blocks enter the Bitcoin network, that is actually halved. So the Bitcoin inflationary rate halves every 4 years. This is known as the halving event. And we can see following each of these halving events, it has had a huge positive impact on the Bitcoin price in the months following. So it's hard to really discuss the correlation and potential future decoupling of Bitcoin and traditional finance, as for the past 10 years or so, traditional markets, especially like equities like the index S&P 500 and the Nasdaq, for example, or the Dow Jones, that has been in almost a decade-long bull run. It hasn't really had any extended periods of drawdown. It had the COVID 2020 crash, but that was over in just a few weeks or a couple of months. We really haven't had any long extended periods of drawdown until very recently. It very much seems like potentially we're going to be hitting a global recession and a long drawn-out bear market in traditional markets. And we can see during this period, Bitcoin has been very much correlated to the S&P. However, as all the previous halving events, again, have occurred while the S&P 500 and traditional markets have been in a long bull cycle, it'll be interesting to see as this new halving event, which in every single occurrence of Bitcoin's price history has had a huge positive impact on price. It'll be interesting to see if traditional markets, which are potentially still in a sideways or downwards price action market, if after this halving event, Bitcoin does actually decouple, reduces its correlation to traditional markets, and finally fulfills its narrative of being more of a hedge asset. So just to summarize, Bitcoin in traditional markets, especially large global indexes like the S&P 500 and the Nasdaq, have had a strong correlation for the vast majority of Bitcoin's existence. and assets that are often associated with Bitcoin, such as gold and silver, those that are referred to as stores of value and potentially hedges against inflation and bear markets, often has an inverse correlation to Bitcoin, which might not be what many expect, but looking at the data, that is the case. What we can also see is the Bitcoin halving events usually have a big fundamental impact on price, and that could be the thing to really kickstart a future decoupling of Bitcoin and future markets. We can see here the attached stock to flow ratio, and while this chart hasn't been the most accurate in the past few months, we can see there is a correlation between the Bitcoin halving events, its inflationary rate decreasing, and Bitcoin having a positive reaction in price following this. So depending on the market situation in traditional markets, if the S&P 500 is still in a long drawn out sideways or bear market, that really could be the opportunity for Bitcoin to show what it is made of. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. Let me know your thoughts on Bitcoin potentially decoupling from traditional markets. Do you think this correlation is going to last a lot longer, or is potentially now, as maybe we find some bottoms in price, is the time where Bitcoin is going to decouple? Let me know your thoughts in the comments down below. I look forward to reading them. Thank you very much for watching, and I'll see you in the next one.